I want to ask, like, you mentioned the DePIN label, so decentralized physical infrastructure,
Yeah.
has been muddied too much to where DePIN kind of exists to allow something that would be really difficult to scale to achieve scale, like a Hivemapper or a Helium. So I guess in your view, like, how many pure DePIN bets are there out there today? Like what, I don't want you to have to like
Yeah.
jump on people, but what to you are like real DePIN examples that you can point to?
I mean, I know of three, and I could be off here, right? I think there's GeoDNet, which is doing positioning technology. I think there's Helium. There's some competitors to Helium as well. I'm not familiar with all of them. And then there's Hivemapper, right? And so I think there's they're physical in nature, right? They require broad geographic coverage, right, or broad geographic distribution. Things that exist in the virtual world, in other words, like, hey, I need a whole bunch of servers to assemble those servers. Okay, that's great. I mean, I don't want to I'm not shitting on them, but that's not physical in nature, right? It's not like you need a whole bunch of people in LA and then, San Diego and then Orange County, et cetera. It's like, no, you just need like servers. You need a whole bunch in America. You need a whole bunch in Asia. Okay, call it a day, And so I don't think there's that many, quite frankly. But I think the term, and all these things kind of go through waves, right? Initially, like DePIN was like super hot, and then everybody kind of piled into DePIN, and then it got watered down and muddied, and it was like, what the heck is DePIN actually? And now we're kind of coming out the other side. It was like, wait, what is DePIN? What are the real products? What are the real businesses? And I think that's just a maturation process. And I think that's good and that's healthy for the industry, is to go through that phase of maturing and, being very clear in terms of what actually is DePIN and what's not DePIN.
You alluded to the token aspect of this. I want to ask just about tokenomics now you think of them, because whenever I cover DePIN, it seems like the big question is, how do you solve tokenomics? Often there's a lot of supply being created to incentivize some activity, but not a great demand side. I know that Hivemapper has fairly complex tokenomics, so I'm just curious to ask how you think about it and what kind of has and hasn't worked as you've built this thing out.
Okay. I've been thinking a lot about this. I mean, I think what's funny about Hivemapper right now is our cost to produce the map are far lower than they were a year and a half ago, okay, or a year ago, when our token price was, much higher, right? So I forgot exactly what it was, 15 cents, 20 cents, whatever it was much higher. So our cost to produce the map are far lower. Literally, the B has reduced our cost to map by, and this is not hyperbole, by about 90%, okay? So our AWS bills have dropped pretty significantly, and they will go down even more as the network basically becomes dominated by the B device, okay? We have a lot more customers. Those new customers are coming on board a lot faster. Like, in other words, the sales cycle is no longer like 6 to 9 months. It's like 30, 40, 60 days, okay? And those contracts of the existing customers are growing. So that was not the case a year and a half ago. And by the way, we have a lot more coverage as well. And obviously our token price is a lot lower than it was then. So, I mean, I just look at it and I say to myself, this is kind of crazy. Our business is fundamentally better on every metric that you could possibly, look at. And yet the token price is a lot lower. And then people say, oh, well, it's the tokenomics. Well, when our token price was like 15 cents or 20 cents, nobody was like shitting on the tokenomics back then, right? So I think we have to say and look at it a little bit, with a little bit of intellectual honesty, right? And say, okay, like the business. And by the way, I think the same thing is true for Helium. Helium has real product market fit in their Wi-Fi wireless product category. I mean, they have AT&T, they have T-Mobile as customers, they have subscribers coming on board, in the hundreds of thousands. I think they have over 1 million customers that they're serving every single day. So like that's a real business. They have tens of millions of dollars of revenue. So and their token price is also like taking a pretty significant hit as well. And so these businesses are improving, getting better, starting to reach scale, and the token price is dropping. So something is not quite adding up here, right? And so I think a big part of it is just like market narrative, right? It's like, yes, there's been way too many DePIN projects that have launched. Many of them, like we were saying before, don't require DePIN at all. Many of them don't even have customers at all. And so that to me, I think is the fundamental issue, is like we're in this kind of market cycle. And I think we'll pull out of it as people start to realize, oh, geez, these things are building real businesses and they're good businesses, right? The other thing to remember here is like networks, businesses like an Uber or a Lyft for that matter, took many, 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 many years to reach scale and then turn that scale into a cash flow machine, right? And so, we're kind of in the very early phases of these networks starting to grow, reach scale, and then start to generate, meaningful revenue and then turn that revenue into meaningful cash flow, positive cash flow. And so, in the case of Uber, it was like literally, I think 10, 15 years before they started to like really generate meaningful cash flow, positive cash flow. And I think the same thing will be true in the case of DePIN, right? For those things that are really reaching massive scale, it will take a while for them to reach positive cash flow. Now they're generating revenue, we're generating revenue. Our customers are growing with us and, allocating more and more dollars towards Hivemapper products. So look, I think we're in this phase right now that is very uncomfortable from a market perspective, and I get it. But if I just look at the businesses themselves, nothing has changed from a tokenomics perspective, from a year and a half ago to now, and the businesses are improving. So, we can talk a little bit more about tokenomics, but I think that's kind of like my macro take on kind of where we're at right now and what's happening.
This is like, a kind of forbidden question maybe, but like, does the token need to be sustainable? So like something I've thought about is, if you talk about the token part of DePIN as just a way to bootstrap these networks as they're emerging, but then in 10 years, the Helium say is a viable business. They convert the HNT token to like equity in Helium company for the token holders, and then they just pay people out in stable coins or something because the speculative like crypto native adoption is no longer as needed. You have a sustainable business. So does it even matter?
I think that's an interesting take. I've heard people talk about this. I don't want to share private conversations, that I've had in the DePIN category, but I've definitely heard some version of that, right? Like where the token is very important in the early days in terms of, exciting and motivating and inspiring people in the kind of like the early speculative phase. And then over time, at least from the contributor perspective, it becomes less critical, right? Because you've reached scale and like it's clear it's a real business and the network starts to grow, et cetera. So from my perspective, I have not yet formed a definitive opinion in terms of like whether or not Hivemapper should go down that road. I do know that there are other folks that are potentially considering going down that road. I think in the Hivemapper case, I think it's too early to make that decision, but I think it's interesting, right? I think it's an interesting take. You're seeing this we're seeing this right now with Robinhood, right? And others that the crypto markets and the stock markets, like the difference between those two things is starting to get a little bit gray, right? It used to be like there was a crypto market and then there was like a stock market and they were like fundamentally like two totally different things, two totally different, investor bases, quite frankly. And I think you're starting to see those things kind of, muddy and converge over time.